What's good, guys? Jesse, game-changing information in today's video as we break down day 38 of the government shutdown. This document reads, because of the political standoff, major bills have stopped moving in Congress, including the Clarity Act, a key law that could finally bring clear rules to the crypto market. Quick disclaimer, all the information presented on this channel is never to be considered financial advice. The goal here is to share educational points with the viewers and open a broader discussion into the crypto market. The delayed regulation updates is just the tip of the iceberg. To illustrate that point, looking into our VIP group 10 hours before the October flash crash started, we were already seeing the market was going to have downside because of a liquidity crisis. This document reads, because the Treasury general account just got filled, that's what all the politicians are arguing about, where they're going to spend their newly refinanced checkbook. There will be a brief but notable discount across crypto assets. Since then, crypto has been taking a tumble to the downside, and all that insight came from an FOMC minutes. This is a very important document that highlights all the points inside the FOMC meeting prior. Now, Kaspa is known for having its most dramatic price movements at FOMC meetings historically. Look at all these emojis. We got a green emoji, massive rip to the upside. Another green emoji representing an FOMC meeting, rips to the upside. But recently, it hasn't been the FOMC meeting so much as it's been the document that makes their policy shifts revolving around quantitative tightening finally official. And this definitely hits Kaspa's hard money narrative. The key to swing trading altcoins, including Kaspa, is hone in on that macroeconomic catalyst that's going to have the most impact on the sector. Zooming out to get some perspective here, supply chain management has a huge backlog of payments. Once this goes online, the supply chain management sector, projects like Zebek, they're going to see an influx of liquidity, and that can be very exciting for price. We were able to identify Zebek before it broke out to the upside in our VIP group, so traders who were inclined to do so could swing for the fences, utilizing the tactic of connecting macroeconomic catalysts to specific sectors. And right now, the longer this government shutdown goes, the bigger the paycheck is for everybody in the military, and that's low tier for effect on crypto and Kaspa specifically. At the top, we've got backdated Treasury bills, and this is putting projects connected to the Genius Act at the top of the heap. In the event your area of expertise is not the Genius Act, a great blanket investment to cover a liquidity injection is DeFi. Projects like Aerodrome, Advantis, Orderly. When the market sees a serious influx of liquidity, DeFi historically has exciting price action. Now, if you're more of a specialist and you're honed into macroeconomics, how the Genius Act works, you might want to take a look at Spark or jump into our VIP group where I'm personally swinging for the fences, very similar to that old school Zebek trade with this Treasury bill catalyst. It's a project competing with Spark that I think is going to do amazing things, and we're not going to put it on the public channel quite yet. What about Kaspa? How does a backlog of Treasury bills affect a store of value project? The key word here is value. Treasury bills are short-term debt. We're talking 1 month, 3 month. The stable build providers utilize that market because it's very liquid. Meanwhile, Kaspa and quantitative easing, which is its proven #1 catalyst, we can see right here. The Fed had to pivot because they feared a bank run in California. Do 30 days of quantitative easing, in Kaspa was a top performing project during that time period. Ever since then, Kaspa's been trailing off as the Fed's been vacuuming money out of the market with quantitative tightening, although Kaspa was able to keep its price higher than any other altcoin. It was right here before the Bank of Japan catalyst happened. Kaspa was ranked in the top 10 all-time best performing projects for the year. The Bank of Japan also connected to bonds very similar to quantitative easing. That's when American traders are going over to Japan. They're ultimately shorting the yen, rolling that money over, and they're buying US assets like Kaspa. So when Japan hikes their rates, it's a domino effect. They've got to unload their positions, causing downside in Kaspa. And this happened twice, once at the all-time high and then once again here. Once the Fed pivots into quantitative easing, the store of value sector as a whole will see some benefit. The key word here is value. BlackRock, banks, institutions, they're trading in some of their hard assets, 10-year bonds, where they're guaranteed a 5% yield. A lot of these earnings are completely exempt from tax also. So they want to get something concrete. This is why we hypothesize Kaspa has such a strong connection with quantitative easing, that the central bank is getting ready to kick in any time now. The largest liquidity injection when the United States government reopens is the backdated Treasury bills. The yields on those assets have not been paid out to institutions and banks, and Kaspa is positioned to see some benefit from that, yet not as much as projects that deal directly in those Treasury bills. Stablecoin issuers like Spark, projects like Ondo, these are really right in the crosshairs to capture liquidity inflows as the government reopens. And this stockpile gets larger and larger the longer the shutdown rolls on. Right now, while the crypto market is distressed, I'm personally swinging for the fences with a micro cap Treasury bill Genius Act stablecoin issuing project. If you guys want to get all the details on my personal trade and more research into how the government reopening is going to affect crypto, now's a great time to jump into our VIP group. Get your hands on all the resources on the menu screen here. Thanks for checking out this video, guys. We'll catch you on the next one.